the users, right? The users assessment of materiality was individualistic. It means the materiality is differ person to person. Individual is individual, and you the 1,000 rupees or 500 rupees may not material to you, but for the user of the accounting statements may be material, important. As an accountant, it may be not material to you, but in the point of view of the users, it may be material. In some cases, opposite to this, accountants are very conscious about it. Even 1 rupees also is very material to him, but for the users, it's not material. So we can think both ways. Accountant also give some kind of very sense to materiality. So in one of these areas, materiality, it was discovered that users' assessment of materiality was individualistic, and that the provider of information was not in the best position to determine materiality for the users, right? It's very, sometimes it's maybe difficult to decide the level of materiality. So there is much work still to do with the behavioral approach. So it says as an accountant have to account researchers, accounting academicians have to make more research on these areas. More research have to do. Now we see the human information processing approach, human information processing approach. How human get the information through their sense and how they process the informations in his mind, how they process information to take decisions. So in this approach, human information processing approach, this is similar to behavioral approach in that it focuses on how users interpret and use in the information provided. Earlier, in behavioral approach, we focus on accountants, the person who prepares the financial statement. But in human information processing approach, here we are focusing on users, how the users interpret the information provided by the accountants. So this is similar to behavioral approach in that it focuses on users interpret and use of information provided. So how they interpret themselves, users' point of view. Predictive approach. Another approach, the predictive approach. This approach attempts to formulate an accounting theory by focusing on the predictive nature, predictive ability of a particular method of reporting. And even that would be of use to the users. I think you have studied about BEP, break-even points. Have you studied break-even point? Have you studied ABC costing, ABC, activity-based costing, life cycle costing? Predict. CVP analysis. So these are the predictive models. You can forecast the budget. It's a predictive one, predictive. So accounting theory by focusing on predictive nature or ability of a particular method of reporting an event that would be used to the user. In such approaches are most prevalent in what we could be regarded as management accounting. Efficient market hypothesis in finance, beta models in finance, chaos theory, all are all examples of this approach, right? Based on an event, we predict the future. And positive approach, right? The positive approach is based on the proposition that managers, shareholders, and regulators are rational and that they attempt to maximize their utility. Which means everybody knows everything. Positive approach says everybody knows everything. They are rational. So there's a caution effect relationship for every event. So this kind of things, and also each stakeholders are trying to maximize their utility, their own interest. The theory became known as Rochester School of Accounting. The positive approach is completely opposite to the normative approach and attempts to explain why. Let's try to explain why accounting procedures and policies are there. It always questions why we have to record in this way, why we have to report in this way, why we have to record in this way, why we have to put debit, why we have to put credit. So they are always asking questions. They always looking for the reason behind. This is called positive approach. And normative approach, whereas the normative approach attempts to prescribe the accounting procedure and policies to be implemented. So normative approach means you can't ask any questions. You have to do what the theory says. No more questions. Do or die. Right or wrong. This kind of things. You can't ask why. So already they have, so for example, in sales, if events called sales for 10,000, what's a double entry? Sales account credit, cash account debit. So this is what accounting procedure. You have to follow this rule. You can't ask questions. You have to do. So this is normative approach. Positive approach asks questions. Opposite to normative approach. We will discuss in the next chapter in detail about what is positive approach and what is normative approach. Future of accounting, the future theory, the future of the theory in accounting. So this section has been very brief and has merely listed the approaches to the development of accounting theory that exist in the current literature. So far we have discussed a lot of approaches and we have discussed, but this list is very brief. Mainly we have talked about three theories: traditional approach, regulatory approach, new approach. So under these three, we have discussed a lot of approaches. But this discussion is very brief. We just touch the thing. This does, however, leave us with several questions. After we discuss this kind of approaches, it raises a lot of questions. First, can we develop an old encompassing accounting theory, which means do we can develop accounting theory that consider all the things, all the approaches in a single accounting theory. Would such theory is useful to the users? Should any theory be global in the aspect and take into account the behavioral aspect? So if we develop that theory, all the people in the global, the world, accept or not? Do researchers need to take into account their own underlying cultural beliefs and behavior when developing an accounting theory? As Glenn Lehman states in Accounting Forum in 2001, in his editorial, accounting might benefit by exploring its direction and future. Accounting must improve community usefulness. Accounting must improve community usefulness and not just simply expand into other fields such as information technology if it is to be remain committed to the public interest. The technology of accounting might benefit through consideration of the relationship between regulation and construction of community virtues. Accountants have been criticized for assuming that if the figures, the numbers are constructed in line with current mandatory and legislative requirement, then the accountants are true and fair. Yet, what is the reported often bears little relation to a reasonable view of the true financial health of the enterprise. Future accounting research might work toward explaining the means, the ways through which corporations, companies might be enabled to act in the interest of communities they serve. So this statement is particularly pertinent given the Enron and WorldCom disaster in the USA. You might heard about a company called Enron and WorldCom. These are the accounting disasters. Failed. This company sold for $1 in the market. Whole company, the value of whole company finally, these two companies have collapsed due to corporate governance failure. And finally, they have sold these companies for just $1. Right? Okay, today we can wind up this session.